Hello everyone, welcome to Exam Plus Academy. In this video, we will discuss last 8 months RBI circular from January to August 2024. This video will be in English language only. If you want to watch bilingual Hindi and English video, is also available on this channel. This information regarding the PDF, if you want to purchase the PDF RBI circular, these PDFs are available RBI circular 1 year, our banking awareness 8 months, RBI circular 8 months, and SEBI, NABARD, IRDA, NPCI, PFRDA, and SIDBI in news circulars notification are available. Prices are here. My UPI ID, name, contact number, mail ID, and for more details you can check there. It's my social media handle: Instagram, Telegram, WhatsApp, and Facebook page. You can join me. This video are also available on this channel. If you want to watch bilingual Hindi and English video 8 months banking and financial awareness January to August 2024, you can check their topic wise video. In this video, we are discussing here RBI in news, RBI circulars, RBI master directions, RBI draft notification, RBI guidelines, and RBI press release. So let's start it. First question is, which of the following statement is correct regarding e-mandates for recurring transaction? What is the right answer? Option are here A, B, and C. First statement, RBI exempted auto replacement of FASTags and NCMC balances from the 24-hour pre-debit notification requirement. True. Correct. While processing the first transaction is e-mandate based recurring transaction series, AFA validation shall be performed. Correct. The cap public limit for e-mandate based recurring transaction without AFA will be rupees 2000 per transaction is correct. Right answer option C, 1, 2 and 3. Option C is the right answer of this question. The RBI has revised its e-mandate framework to exempt auto replacement of FASTags and NCMC balances from the 24-hour pre-debit notification requirement. This change aims to simplify the process for recurring transactions that are irregular in timing. While processing the first transaction in e-mandate based recurring transaction series, AFA validation shall be performed. If the first transaction is being performed along with the registration of e-mandate, then AFA validation may be combined. All such AFA validations shall be as per extant instruction of the RBI. The cap limit for e-mandate based recurring transaction without AFA will be rupees 2000 per transaction. Transaction above this cap shall be subject to AFA as okay. Next question. What is the ranking of the RBI in the Sovereign Wealth Fund Institute SWFI 200 largest central bank rankings by total asset for 2024? Right answer option C, 12 is the right answer of this question. RBI has been ranked 12th globally in the Sovereign Wealth Fund Institute top 100 largest central banks ranking by total asset for 2024, announced on August 1st, 2024. This ranking highlights the RBI's significant growth, with its balance sheet increased by 11.08% year on year to reach 70.47 trillion rupees as of March 31st, 2024. The Federal Reserve of the United States holds the top position in this ranking with assets totaling over $8 trillion. This achievement underscores the RBI's strong position among the world's largest central banks. Next question. Which of the following statement is correct regarding the limit of fund transfer using UPI? What is the right answer? First statement, for normal UPI, the transaction limit is up to rupees 1 lakh per transaction. Correct. Second statement, for few specific categories of transactions in UPI like capital markets, collections, insurance, foreign inward remittances, the transactions limit is up to 2 lakh. Correct. Next, for tax payment, hospital and educational institutes, initial public offering and retail direct scheme, the limit is up to rupees 5 lakh per transaction. Correct. Right answer option A, 1, 2 and 3 is the right answer. You can check the index. It's a table. Payment category and limit. Normal UPI transaction up to 1 lakh. Specific categories of transaction: capital markets, collections, insurance, foreign inward remittances up to 2 lakh. Initial public offering up to 5 lakh. Retail direct scheme up to 5 lakh. Hospital and education institutes up to 5 lakh. Tax payment up to 5 lakh. Next question. How often will credit institutes be required to report credit information under the new RBI regulations starting January 2025? Every 15 days is the right answer, option D. On 8th of August 2024, RBI increased the frequency of credit information reporting by credit institutes to credit information companies from a monthly basis to fortnightly basis. This change aims to provide a more up-to-date picture of a borrower's credit status, benefiting both borrowers and lender. Starting January 1st, 2025, CIs will be required to report credit information every 15 days. This will ensure that any changes in a borrower credit status, such as loan repayment or new credit inquiries, are reflected more quickly in their credit reports. Next question. Which of the following statement is correct regarding Tata Capital? Conversion from a bank to an NBFC. Incorrect. Conversion from our NBFC, non-banking financial company, core investment company, NBFC CIC, to a non-banking financial company, investment credit company. Yeah, it's correct. Merger with Tata Sons, wrong. Right answer, option D, 2 only is the correct. Okay. The RBI has approved Tata Capital conversion from non-banking financial company, core investment company, NBFC CIC, to non-banking financial company, investment credit company, NBFC ICC. Okay. This change follows the merger of Tata Capital with Tata Cleantech Capital and Tata Capital Financial Services. Next, this information signifies Tata Capital shift to an operating company, paving the way for its potential listing. Next question. As per master direction, non-banking financial company P2P lending platform, Reserve Bank Directions 2017, what is the maximum amount a single borrower can borrow across all P2P platform? What is the right answer? Rupees 10 lakh is the right answer of this question. On 16th of August 2024, RBI has updated the master directions for non-banking financial company P2P lending platform, NBFC P2P direction 2017. Exposure limits: lender exposure, a single lender exposure to all borrowers across all P2P platform, is capped at rupees 50 lakh. Borrower exposure: a single borrower can borrow a maximum of rupees 10 lakh across all P2P platform. Platform exposure: the exposure of a single lender to a single borrower on a specific platform is limited to rupees 50,000. Okay. Next, what is the new risk weight for standard commercial real estate residential building exposure for housing finance companies? What is the right answer? 75%. Option A is the right answer of this question. RBI recently issued a notification on August 12, 2024 regarding the review of risk weights for housing finance companies, risk weighted assets for undisbursed loans. To address anomalies in the computations of risk weight asset for undisbursed housing loans and other loans, the RBI has decided to cap the risk weighted asset for undisbursed amount at the level of equivalent disbursed loans. Risk weight for commercial real estate residential building: the risk weight for a fund-based and non-fund-based exposures to commercial real estate residential building classified as standard will be 75%. For non-standard exposure, the risk weight will be 100%. Next question. Who is the chairperson of RBI Expert Committee on Benchmarking of its Statics? What is the right answer? MD Patra. Michael Devrata Patra is the right answer of this question. The Reserve Bank of India has recently set up an expert committee on benchmarking of its statics. This committee, chaired by Deputy Governor MD Patra, aims to align the RBI statistical practices with global standards. The 10-member committee will review the quality of statistics regularly disseminated by the RBI and provide guidance on potential improvements. The committee is expected to submit its report by the end of November 2024. Next question. RBI, Reserve Bank of India and dash countries to create a platform to facilitate instantaneous cross-border retail payment. What is the right answer? ASEAN countries is the right answer. Option B. The RBI has joined Project Nexus, a multilateral initiative to enable instant cross-border retail payment by interlinking domestic fast payment system. An agreement was signed by BIS and the Central Bank of the founding countries, Bank Negara, Malaysia BNM, Bank of Thailand BOT, Bango Central NG Philippines BSP, Monetary Authority of Singapore MAS, and the RBI in Basel, Switzerland. Next is conceptualized by the Innovation Hub of the Bank for International Settlement, aims to connect FPS of 4 ASEAN countries, Malaysia, Philippines, Singapore and Thailand, and India, which would be the founding member and first movers. Next question. What is proposed time period for merchanting exporters to make a payment for goods bought overseas and receive payment for those products sold in third countries? 180 days is the right answer. The RBI proposal to rationalize regulations for export and import transaction is aimed at simplifying and streamlining process for the trading community. The draft operational guidelines for export and import of goods and services issued on July 2nd will replace 61 notification related to export and 62 related to imports. The RBI has invited comments on the draft regulation and directions to authorized dealer banks by September 1st. Banks will now inform exporters before putting them on the cautions list and provide an opportunity to the hear addressing previous gaps. Merchanting exporters currently have 125 days to make payment for goods bought overseas and receive payment for those products sold in third countries. This is proposed to be increased to 180 days. Prior to 2020, caution listing was done automatically by the RBI if export payment were delayed beyond 24 months. This responsibility was later given to authorized dealer. Next, the RBI has announced that the Financial Inclusion Index (FI) index has risen to 64.2 in March 2024, up from 16.1 in March 2023. What is the right answer? 64.2 is the right answer of this question. RBI has announced the Financial Inclusion Index (FI) index has risen to 64.2 in March 2024, up from 16.1 in March 2023, indicating significant progress in financial inclusion across the country. About the Financial Inclusion Index, the FI index is published annually in July. The FI index is comprehensive measures of financial inclusion ranging from 0 to 100, with 0 representing complete financial exclusion and 100 indicating full financial inclusion. The index is based on 97 indicators covering banking, investment, insurance, postal services, and pensions. It was developed in consultations with the government and sectoral regulators to measure ease of access, availability, uses, and quality of financial services. The improvement in the index was driven by growth across all sub-indices, with the users dimension contributing the most to the overall increases. The index has been constructed without a base year, reflecting the cumulative efforts of all stakeholders towards financial inclusion over the years. Next question. According to the revised directions, what must regulated entities ensure before classifying individual or entities as fraud? Right answer. Compliance with the principle of natural justice. Option C is the right answer. Overview. The RBI has issued revised rules on the master directions on fraud risk management for commercial banks, including RRB and all India Financial Institutions. Purpose to strengthen fraud risk management framework and systems regulated entities. Applicability commercial banks including regional rural banks and all India financial institutions. Cooperative banks, urban cooperative banks, state cooperative banks, central cooperative banks. Non-banking finance companies including housing finance companies. What is the objective? Objective encourage improved fraud risk management frameworks in regional rural banks, housing finance companies and rural cooperative banks. Simplify regulations and lessen the compliance burden by dropping 36 previous circulars on the topics. Implementation: bank must maintain uniformity and consistency when reporting fraud incidents to RBI via the web portal by filling fraud monitoring returns FMRs. Okay. Categories for fraud reporting: misappropriations of funds and criminal breach of trust, fraudulent encashment through forged instruments, manipulation of book of account or through fictitious account and conversion of property, cheating by concealment of facts with the intention to deceive any person, and cheating by impersonations. Forgery with the intention of commit fraud by making any false documents, electronic record, willful falsification, destruction, alteration, mutilations of any book, electronic record, paper writing, valuable security or account with intent to defraud. Fraudulent credit facility extended for illegal gratifications, cash shortage on account of frauds, fraudulent transaction involving foreign exchange, fraudulent electronic banking, digital payment related transactions. Okay. Next question. RBI has increased the aggregate ways and means advances WMA limit for state government and union territories to rupees, what is the amount? 60,118 crore effective July 1st, 2024. The RBI has increased the aggregate WMA limit for state governments and union territories rupees 60,118 crore effective July 1st, 2024. The previous WMA limit was rupees 47,010 crore rupees. Next question. RBI launches Finquiry to allow fintechs directly engage with the regulator. When it will be available? Right answer: last working Wednesday of every month from 3 to 5 p.m. Launch details: exclusive 2 hours window for fintechs to visit the fintech department. Location: RBI's fintech department in Mumbai, Maharashtra. Availability: last working Wednesday of every month from 3 to 5 p.m. Purpose: to provide a platform for fintech companies to seek clarity and discuss fintech related queries directly with RBI officials, to foster better communication and understanding between the RBI and fintech companies. Next question. RBI revised domestic money transfer framework. This updated guidelines will come into effect from 1st of November 2024. On 24th of July 2024, RBI issued a new framework as domestic money transfer DMT for regulated firms, making stricter KYC record standard, focusing on banking services and payment system. Key points: cash payout service. Remitting banks will now obtain and maintain record of the names and address of the beneficiary for cash payout. Next, cash pay in service. Remitting banks or business correspondents will verify the remitter using a verified mobile phone number and a self-certified officially valid document as specified in the Master Directions Know Your Customer Direction 2016. Additional factor of authentication: every transaction by a remitter must be validated by an AFA. Income Tax Act compliance: remitting banks and their BCs must follow the provision of the Income Tax Act of 1961 regarding cash deposit. Next question. Digital payment across the country saw a what percent year-on-year rise as of 31st of March 2024? Right answer: 12.6% is the right answer of this question. Increase in digital payment. Digital payment across the country saw 12.6% year-on-year rises as of 31st of March 2024. RBI Digital Payment Index, the RBI Digital Payment Index, RBI DPI, measures to the adoptions of online transactions. Index value, the RBI DPI stood at 445.5 at the end of March 2024. This is an increase from 418.77 in September 2023 and 395.57 in March 2023. Release, the RBI disseminates the RBI DPI semi-annually with a delay of 4 months. Next question. RBI issued PCA. What is the PCA? Prompt Corrective Action Framework for Primary Urban Cooperative Bank, which will be effective from, right answer, 1st of April 2025. RBI issued a PCA. Prompt Corrective Action Framework for Primary Urban Cooperative Banks, effective from 1st of April 2025. Next question. According to the RBI measuring productivity at the industry level, the India KLEMS database, India's employment data provisionally grew at 6% in financial year 2024 from a growth of 3.2% in financial year 2023. The KLEMS data offers insights into 5 key production inputs: capital, labor, energy, material, and service. What is the full form of KLEMS? Capital, labor, energy, materials, and services. The database covers 27 industries aggregated into 6 sectors. According to the PLFS, Periodic Labor Force Survey, and RBI KLEMS data, India generated over 80 million employment opportunities between financial year 18 and financial year 2022, averaging over 20 million jobs per year despite the COVID-19 pandemic in 2021. Okay, next question. RBI allow resident Indians to open foreign currency accounts in Gift City. What is the full form of Gift City? Gujarat International Finance Tech City is the full form of Gift City. Okay, option B is the right answer. Resident Indians can now open foreign currency account FCA at Gift City under the Liberalized Remittances Schemes LRS. These accounts can be used for sending gifts to friends abroad, buying property, purchasing insurance, making fixed deposit, education loan payment, and funding overseas travel. These are the important points. RBI Governor Saktikanta Das asks banks to step up efforts to fight digital fraud. Discussion topic: governance and risk management, cyber security, and fraud preventions. Okay. Banking sector resilience, credit and deposit growth gap, unsecured lending, rupee for cross-border transactions, and bank performance. Next question. What is the theme for 5th cohort of the regulatory sandbox? What is the right answer? Neutral is the right answer. RBI announced the selection of 5 entities for the test phase of the regulatory sandbox theme. Neutral 5th cohort initially announced in October 2023. The RBI received 22 applications, of which 5 have been selected for the test phase. It's a sandbox description. Connecting Dot Consultancy Private Limited, EPFI Technology Private Limited, Fingers Technology Private Limited, India Bank's Digital Infrastructure Company IBDIC Private Limited, and Synergy Technology Private Limited. Next question. As per the Master Directions on Treatment of Willful Defaulters and Large Defaulters, AII regulated entities including lenders must submit information to all credit information companies on large defaulters at monthly intervals. Okay. Banks and NBFCs must examine the willful default aspects in all non-performing assets accounts with outstanding amount of rupees 25 lakh and above. All regulated entities including lenders must submit information to all credit information companies on large defaulters at monthly intervals. Definitions. Willful defaulter. A borrower or guarantor who has committed willful default with an outstanding amount of rupees 25 lakh and above. Large defaulter. A defaulter with an outstanding amount of rupees 1 crore and above where a suit has been filed, the account has been classified as doubtful or lost. Next question. RBI issues final directions on cybersecurity controls for non-bank PSOs. What is the full form PSO? ठीक है. What is the full form of PSO? Payment System Operators. Option C is the right answer of this question. Timeline for large PSO. Must comply by 1st of April 2025. Includes entities like Clearing Corporation of India Limited, NPCI, BBPOUs यानी भारत बिल पेमेंट ऑपरेशंस यूनिट्स, पेमेंट एग्रीगेटर, नॉन बैंक एटीएम नेटवर्क्स, व्हाइट लेबल एटीएम ऑपरेटर्स, लार्ज पीपीआई इशूअर एंड ट्रेड रिसीवेबल डिस्काउंटिंग सिस्टम ट्रेड्स. टाइमलाइन for medium PSOs must comply 1st April 2026. Includes cross-border money transfer operators under the money transfer service schemes and medium PPI issuer. Timeline for small PSOs must comply by 1st of April 2027. Includes small PPI issuer and instant money transfer operators. Next question. Consider the following statement regarding exemptions from AFA for Aadhaar enabled payment system touchpoint operators. What is the right answer? Which of the following statement is a true? Small value card transactions up to rupees 5,000. True. E-mandates for recurring transactions such as credit card, bill payment, mutual funds and insurance premium. True. Digital toll payment and offline payment transactions up to rupees 7,500 is true. Right answer option C, first, second and third. Next question. You can check here the all contents regarding the questions. Next question. According to the new RBI guidelines, what can primary urban cooperative banks do with the balances in their dividend equalization fund as a one-time measure? What is the right answer? Option D. Transfer them to general reserves or free reserves. Option D is the right answer of this question. RBI has issued a new guidelines for primary urban cooperative banks regarding the treatment of dividend equalization fund DEF. Previously, UCBs could not use accumulated profit or reserve for dividend payment and could only pay dividends from the net profit of the current year. However, as a one-time measure, UCBs are now permitted to transfer the balances in the DEF to general reserves or free reserves. These credit balance in general reserves or free reserves qualify as Tier 1 capital according to RBI's Master Circular. Remember, the UCBs must comply with applicable state, central, cooperative acts, bylaws and other relevant laws and regulations. Next question. What percentage of global GDP is currently constituted by digital economy? 15%. Option D is the right answer of this question. Report on Currency and Finance 2023-24 released by RBI. This comprehensive report provides insight into India's economic performance, financial sectors and policy measures. Highlights from the report. First point, digital economy growth. Next point, factors driving growth. Next, digital public infrastructure. Next, social welfare. Next, challenges. Next, recommendation. All points are here. You can check there with the content. Next question. What is the new criteria of bulk deposit in scheduled commercial bank? Term deposit of rupee 3 crore. Option C is the right answer of this question. On a review, it has been decided to revise the definition of bulk deposit for a scheduled commercial banks, small finance banks and local area banks. The term bulk deposit would now mean single rupee term deposit of rupee 3 crore and above for scheduled commercial banks and small finance banks, single rupee term deposit of rupee 1 crore and above for local areas bank as applicable in case of regional rural bank. Exit section, amendment section. You can check their definitions. Okay. Next question. What types of offshore funds can listed Indian companies and resident individual invest in after the RBI's new norms? What is the right answer? in any instrument regardless of its form and in funds set up as limited partnership, LLCs, BCCs, companies or trusts. Option C is the right answer of this question. First point, the RBI has allowed listed Indian companies and resident individuals to invest in offshore funds that are regulated through their fund manager. Next, these investments can be in any instruments regardless of its form and in funds set up as limited partnership, LLC, VCC, companies or trusts. Next, until now, overseas portfolio investment was permitted only if the funds were regulated in their home jurisdictions and the investment were in units of the funds. The RBI issued circular on Friday amending the Foreign Exchange Management Overseas Investment Direction 2022, lifting several restrictions. This will reopen the doors for LP investment into Singapore variable capacity company funds as well as funds set up in Delaware and allow Indian employees of Indian advisory entities to participate in overseas funds. This move is expected to provide more flexibility and opportunity for Indian investors and companies in the global market. Next question. Exim Bank of India supported line of credit of 23.37 million US dollar to which country? What is the right answer? Guyana is the right answer of this question. Exim Bank, Export Import Bank of India, has entered into an agreement dated on 15th of March 2024 with the government of the Cooperative Republic of Guyana for making available to the latter. Government of India supported LOC line of credit of 23.37 million US dollar for procurement of two Hindustan 228-201 aircraft from Hindustan Aeronautics Limited. Out of the total credit by Exim Bank under the agreement, goods, works and services of the value of at least 75% of the contract prices shall be supplied by the seller from India and the remaining 25% of goods and services may be procured by the seller for the purpose of the eligible contract from outside India. Next question. What new flexibility has the RBI provided to AD Category 1 banks in the recent circular international trade settlement in INR? Right answer. Opening additional special current account for settlement of export and import transactions. Option B is the right answer. As per the updated guidelines, authorized dealer category 1, AD category 1 banks that were allowed to open an additional special current account specifically for the settlement of export transactions may now utilize it for import transaction as well. The new provision effective as of the recent RBI circular extends this facility to include the settlement of both export and import transactions. This move aims to offer greater operational flexibility to exporters and importers. Next question. With effect from financial year 24-25, a higher weight 125% shall be assigned to the incremental priority sector credit in the identified districts where the credit flow is comparatively lower per capita PSL less than rupees 9,000. Okay, to address regional disparities in the flow of priority sector credit at the district level, it was decided to rank districts on the basis of per capita credit flow to priority sector and build an incentive framework for districts with comparatively lower flow of credit and a disincentive framework for districts with comparatively higher flow of priority sector credit. Next point, with effect from financial year 24-25, a higher weight 125% shall be assigned to the incremental priority sector credit in the identified districts where the credit flow is comparatively lower per capita PSL less than rupees 9,000. Lower weight 90% will be assigned for incremental priority sector credit in the identified districts where the credit flow is comparatively higher per capita PSR greater than rupees 42,000. The list of both categories of districts is given the annexes I, A and IB with and will be valid up to financial year 26-27. The districts other than those mentioned in annexes IA and B will continue to have existing weightage of 100%. This is a question on the website of RBI FAQ. It's a FAQ, okay? Can bank loan against gold be classified under priority sector? You can also give the answer. It's my answer. The PSL guidelines are activity and beneficiary specific and are not based on type of collateral. Therefore, bank loans give to individual businesses for undertaking agriculture activities do not automatically become ineligible for priority sector classification only on account of the fact that underlying asset is gold, jewelry, ornament, etc. It's a FAQ, frequently asked question. Okay, it's a FAQ. You can check the website below for mention here explanation regarding the explanation of this question. Okay, next question. Next FAQ. Okay, it's a FAQ, frequently asked question. Are foreign banks with less than 20 branches permitted to buy PSLC General for achieving the target of 8% of lending to other than export? You can also give the answer. The answer is foreign banks with less than 20 branches are not allowed to buy PSLC General for achieving their 8% target of lending to sector other than exports. However, such banks are allowed to buy PSLC Agriculture, PSLC Micro Enterprises and PSLC Small and Marginal Farmers for the same. Next question. Okay, which bank has been excluded from the second schedule of the RBI Reserve Bank of India Act 1934? What is the right answer of this question? Nagpur Urban Cooperative Bank Limited is the right answer. It is advised that Nagpur Urban Cooperative Bank Limited has been excluded from the second schedule to the Reserve Bank of India Act 1934 white notification dated April 1st, 2024. Next question. Which organization is partnering with the RBI to host Harbinger 2024? Apex is the right answer. Option B. Theme 1. Zero financial frauds. Real-time prediction, detection and prevention of frauds in financial transactions using alternate sources of data including publicly available information. Ensuring transactions anonymity is token-based transaction while maintaining financial system integrity. Identifying mule bank accounts, payment wallets. Theme 2. Being Divyang friendly. Accurately identifying banknotes by visually impaired. Being part of Harbinger 2024 gives an opportunity to the participants to get mentored by industry experts and exhibit their innovative solutions before an eminent jury and win exciting prizes under each problem statement. Okay, these are the category and amount. First, winner across each problem statement 40 lakh. Next, special prize to the best of all women team, a team comprising of only women member across all the 4 problem statement. INR 20 lakh. Stipend per team shortlisted for solution development for meeting the cost of development of prototype. INR 5 lakh. Okay. Next, what is the theme of 4th cohort of the regulatory sandbox? Prevention and mitigation of financial fraud. Option B is the right answer. In the 4th cohort of regulatory sandbox with the prevention and mitigations of financial fraud as its theme, 6 entities were to commence testing of their products which was communicated white press release dated January 5th, 2023. You can check the table. It's a table. You can check there. Next question. RBI has decided to put in place a revised framework on currency swap arrangement for SAARC countries for the period of 2024 to 2027. What is the total corpus of the rupee support? Right answer 250 billion rupees is the right answer. Under the framework of 2024-27, a separate INR swap window has been introduced with various concessions for swap support in Indian rupee. The total corpus of the rupee support is rupees 250 billion. The RBI will continue to offer swap arrangements in US dollar and euro under a separate US dollar euro swap window with the overall corpus of 2 billion US dollar. The currency swap facility will be available to all SARC member countries subject to their signing the bilateral swap agreements. Next question. RBI recently released an updated guidance note and on operational risk management and operational resilience. What is the primary purpose of this update? Right answer, to emphasize the importance of lenders recovering from disruptions. Okay, RBI released an updated guidance note on operational risk management and operational resilience for lenders on May 1st, 2024. This note aligns RBI regulations with international best practices and the Basel Committee on Banking Supervision Principles. Here's summary of the key points. First, updates RBI guidance. This replaces the previous guidance note on management of operational risk from 2005. Focuses on operational resilience. It emphasizes the importance of the lenders being able to withstand and recover from disruptions. Next, aligns with BCB's principle. The update incorporate best practices outlined in the BCB's revisions to the principle for the sound management of operational risk and the principle for operational resilience documents, both released in March 2021. Next question. According to the new rules, what is the maximum risk banks can take in the stock market in a day? 10% is the right answer. RBI made some changes on 3rd of May 2024 to the rules for banks when they are involved in stock market transactions. These changes are related to the T+1 settlement system, which means that the transaction is settled on the next day. Banks can only risk up to 30% of the money they are moving around in the stock market in a day. The 30% limit is based on the possibility that stock prices could fall by 20% in a day, with an extra 10% buffer just in a case. Next point, banks can only promises to pay money issues if they have a right to stocks that are being bought on a store. Next point, if a transaction is pre-funded, which means the money is already available, then the bank doesn't need to have a right to the stocks. Next, if a bank has paid a margin in cash, then its exposure to reduced by the amount of the margin paid. Next point, if any exposure remains at the end of the day, the banks needs to have enough capital to recover it. Next question, what is the maturity period of the floating rate bonds FRBs? 7 years is the right answer. Option C. The RBI announced an 8% of interest rate on the floating rate saving bonds FRSB 2034. Unlike traditional bonds with fixed interest rates, the interest rates on the FRSB 2034 will be adjusted every 6 months based on the average yield of recent auction for short-term government debt. The interest rate is variable and will be reset every 6 months. The current rate for the next 6 months on the FRB bond will be 8%. The rate is calculated by taking an average of the interest rate from the previous 3 auctions of short-term government debt plus a small additional fixed amount. Next point, these bonds can be good option for investor who want an interest rate that reflects current market condition. FRBs have a maturity period of 7 years. The minimum investment amount for FRBs is rupees 1000, while there is no maximum limit. FRBs are backed by the Government of India, making it one of the safest investment. Interest on these bonds is paid semi-annually or 1st of January and 1st of July each year with no provision for cumulative interest payment. Next, what is the purpose of REC Limited setting up a subsidiary in GIFT City? To diversify its portfolio and explore new growth avenues. Option D is the right answer of this question. The RBI has given a no objection certificate to REC Limited, a leading non-banking financial company under the Ministry of Power, for setting up a wholly owned subsidiary. Next question. What is the main goal of the RBI proposed new rules for project finance? Option B, to manage risk associated with long-term infrastructure projects. Option B is the right answer. The RBI proposed new rules for project finance in early May 2024. The main goal is to manage risk associated with infrastructure projects that take a long time to complete. Some key features: hiring, provisioning during constructions. Okay, next point, provisioning linked to project stage. Next point is strict timelines for NPA classification. Next question, what was the net income of the RBI for the year 23-24? 2.11 lakh crore is the right answer. The RBI net income surged to rupees 2.11 lakh crore, significantly up from rupees 87,420 crore the previous year. This increase was driven primarily by higher interest earnings from foreign securities. The central bank balance sheet expanded by 11.08%, reaching rupees 17.48 lakh crore as of 31st of March 2024. Unclaimed deposit with banks increased by 26% to rupees 78,213 crore by the end of March 2024. These deposits are transferred to the RBI Depositor Education and Awareness Fund if they remain unclaimed for over 10 years. Next question, what is the name of the portal that allow individual or entities to apply online for regulatory approval, licenses and authorizations from RBI? Pravaha is the right answer. Option D. RBI launched 3 major initiatives: Pravaha portal, retail direct mobile app or fintech repository. Pravaha portal, it is a centralized secure web-based platform that allow individuals or entities to apply online for regulatory approval, license and authorizations from the RBI. The portal includes 60 application forms across various regulatory and supervisory departments of the RBI, enabling applicants to track the status of their applications and receive timely decisions. Key features: submit applications online directly through the portal, track and monitor the status of your application or reference, respond to any clarification or queries raised by the RBI, receive decision from the RBI within a specified time framework. Next, according to the RBI, value of foreign currency notes sold by FFMCs non-bank ADs category second to the public for permitted purposes should not be less than %, यानी कि 75% of the value of foreign currency notes purchased from the FFMC's ADs or quarterly basis. It has been decided that from 1st of July 2024, value of foreign currency notes sold by FFMC's non-banks ADs category second to the public for permitted purpose should not be less than 75% of the value of foreign currency notes purchased from their FFMC's ADs on a quarterly basis. Data of such sale and purchase should be maintained and made available for audit inspection. Next question, borrowing against gold jewelry increased by what time from 2018-19 to 23-24? Right answer 5 times. Option D is the right answer. Indians borrowed over rupees 1 lakh crore by mortgaging their gold jewelry in the fiscal year 23-24. This amount represents a 5-fold increase compared to the borrowing figures 2018-19. The rapid growth in a gold loan is the fastest observed in the recent year, leading the RBI to issue warnings to banks and financial institutions. Next question. What was the net claim of non-residents on India by the end of December 2023? 370.4 billion US dollar is the right answer of this question. The report showed a significant rise in reserves assets by 34.8 billion US dollar during the third quarter of 2024, which constitutes over 85% of the increase in foreign assets held by Indian residents. Meanwhile, the net claim of non-residents in India declined by 12.2 billion US dollar during October to December 2023, culminating at 370.4 billion US dollar by the end of December 2023. Next question. What was the reason for deferring the implementations of new rules for foreign exchange derivatives? Right answer. The market participants requested more time. Option B is the right answer of this question. The RBI has aimed to tighten the norms around currency derivatives trading to curb speculative activities in the market segment. RBI underscored that the regulatory framework for exchange-traded currency derivatives has remained consistent over the years. Next question. After guidelines from RBI, SBI and Standard Chartered Bank India carried out a credit default swap trade worth 25 crore on 4th of April 2024. The State Bank of India and Standard Chartered Bank India carried out a credit default swap trade worth rupees 25 crore on 4th of April 2024. Credit default swaps are derivative instruments that provide a form of insurance against the risk of default of the issuer of a bond. Next question. Which of the following has received RBI's note to operate as an online payment aggregator? CAMS is the right answer. Option C. The authorizations was received on 10th of April 2024. The company had previously received an in-principle authorization from RBI back in February 2023. CMS Payment Business Unit CAMS Pay currently serves clients which include mutual fund, insurance companies, bank and NBFCs. Next question. What does the PPI license allow Revolt to do in India? Right answer. Issued prepaid card and prepaid wallet. Option B is the right answer of this question. RBI has indeed granted in principle approval to Revolt for a prepaid payment instrument license on 12th of April 2024. This approval enables Revolt to issue prepaid card and prepaid wallet in India, allowing it to operate as a domestic player in the market. This builds upon the existing license which Revolt India has successfully obtained from RBI to operate as a category second authorized money exchange dealer AD second and to provide multi-currency forex cards and cross-border remittances services. Next question. What is the minimum net worth required for non-bank payment aggregator physical point of sale by 31st of March 2028? Rupees 25 crore is the right answer. RBI has recently issued to all payment aggregators to undertake due diligence of merchants onboarded as per RBI norms. This is a part of RBI efforts to regulate the payment ecosystem. The due diligence of all merchants by payment aggregators shall be completed by 30th of September 2025. The RBI has directed the aggregator to monitor transactions activity of merchants on an ongoing basis. Based on its transactions pattern, the merchant shall be migrated to a higher category of customers due diligence CDDD. Next question. What is the purpose of the key fact statement as per directives issued by the RBI? Right answer. To enhance transparency and reduce information asymmetry on financial products. The KFS is a statement of key facts about a loan agreement in a simple and easy to understand language provided to the borrowers in a standardized format. It includes critical information about the terms of the loan agreement, including the all-inclusive interest cost. This measure is aimed at enhancing transparency and reducing information asymmetry on financial products offered by different regulated entities, thereby empowering borrowers to make informed financial decisions. This directive applies to all new retail and MSME term loans sanctioned on or after 1st of October 2024, including fresh loans to existing customers. Next question. What is the new minimum capital requirement of ARCs as per the new master direction? Rupees 300 crore is the right answer. The master directions provides comprehensive guidelines and instruction for ARCs. One of the significant changes is the increase in the minimum capital requirements for ARCs. It has been raised to rupees 300 crore compared to rupees 100 crore as on 11th of October 2022. Next question. Which bank is the first bank to successfully execute RBI programmable CBDC pilot? IndusInd Bank is the right answer. On 22nd of April 2024, IndusInd Bank announced the successful executions of the RBI programmable CBDC pilot, making it the first bank to do so. As part of this pilot, IndusInd Bank initiated the programmable CBDC disbursements to 50 farmers in the Ratnagiri district of Maharashtra and plans to cover around 1,000 farmers going forward. This marks a significant milestone in the adoption of innovative financial solutions for the agriculture sector. The project involved IndusInd Bank crafting digital wallets and managing CBDC transfer alongside partners including CIH, which is a sponsor agency for this project, and a climate tech company. Next question. What is the minimum net worth requirement for SFBs seeking a universal banking license? 10 billion rupees is the right answer of this question. Okay. These criteria are essential for SFBs to transition into full-fledged banks and offer comprehensive services to both retail and corporate clients. Here are the key requirements. Operational track record, net worth, capital adequacy, profitability, limited non-performing assets, market listing, existing promoters, shareholding plans, diversified loan portfolios, detailed rational assessment guidelines, and norms upon transition. Next question. How do these FEMA regulations benefit Indian companies? By reducing administrative complexities is the right answer, option D. The RBI has recently introduced Foreign Exchange Management Act FEMA regulations to simplify the process of Indian companies directly listing on international stock exchanges. FEMA regulations aims to create conducive environment for Indian companies seeking to list directly on international exchanges, ultimately contributing to their global expansion and success. Next question. What is the purpose of the partnership between NABARD and the RBI Innovation Hub? To revolutionize digital agricultural lending is the right answer, option B. On 27th of April 2024, NABARD partnered with the RBI Innovation Hub to revolutionize digital agricultural lending in India, integrating NABARD's eKCC loan origination system portal with the public tech platform for frictionless credit. Will streamline the lending process for KCC loans. Approximately 351 district and state cooperative banks and 43 regional rural banks will benefit from this integration, reducing loan processing time from weeks to 5 minutes. The initiative aims to provide instant doorstep credit to India's 120 million farmers, fostering rural prosperity and frictionless finance. Next, what is the investment limit for foreign portfolio invested in government securities for the financial year 24-25? 6% is the right answer, option B. RBI stated that the FPI limit for investment in state government securities and corporate bonds will remain unchanged at 2% and 15% respectively of the outstanding security stocks for financial year 25. The allocation of incremental changes in the G section limit over the two subcategories, general and long term, will be retained at 50-50 for 24-25. Furthermore, the aggregate limit of the notational amount of the credit defaulter swaps sold by FPIs will be 5% of the outstanding stock of corporate bonds. Next question, what is the minimum net worth of that an entity operating ETPs must maintain according to the draft framework? Rupees 5 crore is the right answer. The key points include maintaining a minimum net worth of rupees 5 crore, being a company incorporated in India, and conforming to all applicable laws and regulations, including the Foreign Exchange Management Act 1999 for any non-resident shareholding. The entity is also required to maintain robust technology infrastructure. The RBI has invited comments and feedback on the draft from relevant parties by 31st of May 2024. Next question. When is the effective date of the amalgamation of Fincare Small Finance Bank with AU Small Finance Bank? 1st of April 2024 is the right answer. This merger, one of the initial consolidations in the relatively new small finance bank sector, has received approval under the powers vested in subsection of Section 44A of the Banking Regulation Act of 1949 as stated by the central bank. As per the agreement between the two bank, shareholder of Fincare Small Finance Bank will receive 579 equity shares of AU Small Finance Bank for every 2000 shares held. These acquisitions will give Jaipur headquartered AU a foothold in southern India and pave its entry into the microfinance business. All the branches of Fincare Small Finance Bank will function as branches of AU Small Finance Bank from 1st of April 2024. Next, the revised Bharat Bill Payment System Framework applicable to which of the following? Option C, A and B both. Okay. Only NPCI, Bharat Bill Payment Limited, only Bharat Bill Payment Operating Unit. Option C is the right answer. RBI has put in place a revised regulatory framework for Bharat Bill Payment System based on a review of development in the payment landscape. The new framework, applicable from 1st of April 2024, seeks to streamline the process of bill payments, enable greater participation, and enhance customer protection. The revised framework will apply to NPCI, Bharat Bill Payment Limited, and all Bharat Bill Payment Operating Units. These directions spell out the roles and the responsibility of the system operator and system participants. Next question. What were the serious deviations observed by the RBI in the gold loan portfolio of IIFL Finance Limited? Deviations in assaying and certifying purity and net weight of the gold at the time of sanction loans and at the time of auction upon default. Option A is the right answer of this question. The regulatory observed certain material supervisory concerns in the gold loan portfolio of the company, including serious deviation in assaying and certifying purity and net weight of the gold at the time of sanction of loans and at the time of auction upon default. These violations significantly and adversely impact customer interest. Despite the RBI engagement with the company's senior management and statutory auditors on these deficiencies, no meaningful corrective action has been evidenced so far. Next, what is the main aim of the directives issued by the RBI to card networks? Right answer, to ensure greater choice and flexibility for customer. Some key points are here. Card issuers shall not enter into an arrangement or agreement with card networks that restrains them from availing the services of other card networks. Card issuers shall provide an option to their eligible customers to choose from multiple card networks at the time of issue. For existing cardholders, this option may be provided at the time of the next renewal. These directions do not apply to credit card issuer with fewer than 10 lakh active cards. Next question. What does UDGAM stand for? Unclaimed Deposit Gateway to Access Information. Option C is the right answer of this question. As of 4th of March 2024, there are 30 banks registered on the Udgam portal. Udgam, which stands for Unclaimed Deposit Gateway to Access Information, is a centralized web portal developed by the RBI. These 30 banks covered around 90% of unclaimed deposit in the Depositors Education and Awareness Fund of RBI. The remaining banks are in the process of getting onboarded. Customers can register on the Udgam platform using their mobile number. Next question. What is the main aim of the RBI and Bank Indonesia MOU? Right answer. To promote the use of INR and IDR bilaterally. The MOU aims to promote the use of INR and IDR bilaterally. It covers all current account transactions, permissible capital account transactions, and any other economic and financial transactions as agreed upon by both countries. This framework would enable exporters and importers to invoice and pay in their respective domestic currencies, which in turn would enable the development of INR IDR foreign exchange markets. The MOU was signed by the Governor of the RBI, Sri Saktikanta Das, and the Governor of Bank Indonesia, Mr. Perry Varchio. Next question. Why did the RBI supersede the board of Abhyuday Cooperative Bank? Due to poor governance. Option B is the right answer of this question. RBI has reconstituted the Committee of Advisors of the Abhyuday Cooperative Bank. This committee is expected to assist the administrator Sri Satya Prakash Pathak in managing the affairs of the bank. The RBI had superseded the board of Abhyuday Cooperative Bank due to concerns about poor governance and appointed an administrator to manage the affair of the lender. The bank was allowed to continue its normal banking activities. Next question. The omnibus framework issued by RBI contains broad parameters for what? Recognizing self-regulatory organization. Option A is the right answer. The omnibus framework contains broad parameters such as objective, responsibility, eligibility criteria, governance standard, applications process, and other basic conditions for granting recognitions. These parameters will be common for any SRO proposed to be recognized by the RBI. Other sector-specific guidelines like the number of SRO, membership, etc. will be issued separately by the respective departments of the RBI wherever a sectoral SRO is intended to be set up. Next question. According to the RBI annual report on embezzlement schemes, which RBI offices has received the highest complaint? Chandigarh is the right answer of this question. It is observed that the state UTs of Chandigarh, NCT of Delhi, Haryana, Rajasthan, and Gujarat were the top 5 contributor to embezzlement complaints, while the state of Mizoram, Nagaland, Meghalaya, Manipur, and Arunachal Pradesh were the lowest contributor during the year. The RBI hosted the annual conference of the RBI Ombudsman in Mumbai, Maharashtra. The conference theme centered on protecting the consumers, building robust system and procedure. Reporter highlighted a significant surge of over 68% in complaints filed under the Reserve Bank Ombudsman scheme during the fiscal year 22-23, totaling 7.03 lakh. Next question. Financial Literacy Week was scheduled from February 26 to March 1st, 2024. It has been observed every year since 2016. Option D. RBI has observed the Financial Literacy Week 2024 from February 26 to March 1st, 2024 on the theme Make a Right Start, Become Financially Smart. FLW has been observed every year since 2016 with the aim of promoting financial literacy. The focus areas include saving and power of compounding, banking essentials for students, and digital and cyber hygiene, aligning with the objectives of the National Strategy for Financial Education 2022 to 2025. Next question. The RBI has asked Paytm Payments Bank Limited to stop onboarding new clients immediately as per Section 35A of the Banking Regulation Act 1949. When was the PPBL founded? 2017 is the right answer. The RBI has instructed Paytm Payment Bank Limited to cease onboarding new clients immediately in accordance with its authority under Section 35A of the Banking Regulation Act 1949. After February 29, 2024, no more deposits, credit transaction, top-ups or withdrawal will be permitted in any customer accounts, prepaid card, wallet, FASTag, NCMC card, etc. as per the RBI Circular post from August 2023. The RBI has ordered the Payments Bank subsidiary of Paytm to halt the acceptance of fresh deposit in its accounts and popular wallets from March onwards. Same content here. You can check the next question. Trades. Trade Receivable Electronic Discounting System supported by RBI has seen an increase in invoice financing from lenders in 2023. TREDS was launched by the RBI in which year? 2018 is the right answer. RBI-backed invoice discounting platform TREDS reported a jump in invoices financed by lenders in 2023. The electronic platform facilitates easy access to credit for small businesses that are vendors to large corporations. TREDS was launched by RBI in 2018. Next question. RBI has directed major international payment provider Visa and which card to suspend card-based commercial transactions between small and large firms. Right answer, MasterCard. RBI has instructed major international payment players Visa and MasterCard to halt card-based commercial transactions conducted by both small and large businesses. The reason for action: the directive from RBI arises from concerns related to compliance with KYC regulations. Next, which section of the Amendment RBI Act of 1934 authorized the central government to form a 6-member monetary policy committee? Section 45ZB is the right answer, option C. Under Section 45ZB of the Amendment RBI Act 1934, the central government is empowered to constitute a 6-member monetary policy committee. MPC will determine the policy interest rate required to achieve the inflation target. The first such MPC was constituted in September 2016. Next question. The RBI has increased the annual remunerations limits for non-executive directors in private sector banks from how many lakh to rupees 30 lakhs? Rupees 20 lakh is the right answer, option B. Reserve Bank of India has revised upwards the ceiling in respect of remunerations of non-executive directors other than the chair of the board to rupees 30 lakh per annum from rupees 20 lakh. The revised ceiling applies to NED of private sector banks. It also applies to NED of small finance bank and payments bank. Additionally, it is applicable to the wholly owned subsidiary of foreign banks. Next question. In exercising its authority under which section of the RBI Reserve Bank of India Act 1934 did the Reserve Bank of India cancel the certificate of registrations of 3 non-banking financing firms NBFCs? Section 45IA is the right answer. Reserve Bank of India, in the exercise of powers conferred on it under Section 45IA of the Reserve Bank of India Act 1934, has cancelled the certificate of registrations of 3 NBFCs. These 3 NBFCs are Bharatwir Investment and Finance India, Cox and Kings Financial Services, PSPR Enterprises Private Limited. In a separate notification, RBI stated that 3 NBFC and 1 housing finance company surrendered their license. Reliance Home Finance Limited surrendered its license after exiting the housing finance institutions business. Next question. What is the projected dividend income from the RBI and public sector financial institutions for the financial year 2025? Rupees 1 lakh crore is the right answer of this question. The government has projected a dividend income rupees 1.0 lakh crore from the RBI and public sector financial institutions for the financial year 2025. This is slightly lower than the estimated rupees 1.0 lakh crore that the government is set to earn in the current fiscal year. The increase in the current fiscal year estimate is due to the RBI paying a dividend of rupees 87,416 crore in May last year. Next question. What is the maximum percentage of the paid up share capital or voting rights that HDFC Bank can acquire in the six banks? 9.5% is the right answer of this question. These banks are Axis Bank, Suryodaya Small Finance Bank, ICICI Bandhan, Yes Bank, IndusInd Bank. The term aggregate holding includes shareholding by the bank's entities under the same management control, mutual fund trustees and promoter group entities. The approval was granted following application made by HDFC Bank to the RBI on December 18, 2023. The RBI approval is valid for a period of 1 year from the date of the RBI's letter, which is until February 4th, 2025. Next question. Which company is the first enterprises SaaS player to receive the payment aggregator license from the RBI? Joho is the right answer. Option C. Reserve Bank of India has granted final authorizations to Joho, JustPay and Decentro to operate as payment aggregator. This approval allows these companies to provide payment services to online merchants by accepting payments from customers. Joho, a software as a service startup, received the payment aggregator license on 2nd of Feb. It is the first enterprise SaaS player to get this note from RBI. JustPay and Decentro received the final license to operate as a payment aggregator on 6th of Feb. Next question. What recent amendment has the RBI made to its master directions or prepaid payment instruments? Right answer. It allows authorized banks and non-bank issuers to issue PPIs for making payment across various public transport systems. Option B is the right answer of this question. RBI has recently made an amendment to its master directions on prepaid payment instruments. This amendment allows authorized bank and non-bank issuer to issue PPIs for making payments across various public transport systems. Public transport systems across India cater to multitude of commuters on daily basis. Next question. RBI economist proposes a new criterions, the DTI ratio to assess borrowers' credit worthiness. What is the T in DTI? Right answer. Option D, 2 is the right answer. Debt to income. Okay, DTI, debt to income, T2. Okay. Next question. Zomato Payment receives RBI approval to operate as an online payment aggregator in 2023. Zomato partnered with which bank to establish its own UPI interface offering Zomato UPI? ICICI Bank is the right answer of this question. Zomato Payment, a wholly owned subsidiary of Zomato Limited, has received the certificate of authorization from the Reserve Bank of India to operate as an online payment aggregator in an exchange filing. The food delivery platform stated the central bank has allowed it to carry out the business as payment aggregator and issuer of prepaid payment instruments with effect from January 24, 2024. Next question. What percentage of urban cooperative bank having a minimum capital to risk weighted asset ratio CRAR will be included in the second schedule by RBI? Right answer. Option B, 3% is the right answer. RBI has revised the eligibility criteria for the inclusion of urban cooperative banks in the second schedule of the RBI Act 1934. The decision has been taken by a central bank in order to bring urban cooperative banks under the ambit of the revised regulatory framework. First, capital requirement for inclusion, additional criteria, regulatory and supervisory compliance, eligibility for licensed Tier 3 and Tier 4 UCBs. Next question. RBI prepares tougher rules for housing finance companies that take deposit. How many months will be the maximum duration that HFCs can take deposit for before it is shortened to 6 months? 120 months is the right answer. Option D. RBI has proposed a phased transitions to tighten regulations for housing finance companies, aligning them more closely with NBFCs. First, uniform prudential parameters, increase in liquid asset requirement, reduction in public deposit selling. Important information regarding the NBFC operational requirement, you can check there. Next question. RBI has provided guidelines as mentioned in the circular annex for requesting permissions on matters relating the appointment, reappointment or removal of statutory auditors under which section of the Banking Regulation Act 1949. Section 31A is the right answer. Section 31A. RBI has issued guidelines for appointing and reappointing auditors of state and central cooperative banks. These guidelines are applicable for accounting period commencing on or after 1st of April 2024. Same content here, you can check the content with the important points. Next question. How many years has Michael Debrata Patra, the Deputy Governor of RBI, been reappointed by the Appointments Committee of the Cabinet? Right answer 1. Option A, 1 is the right answer. The Appointment Committee of the Cabinet has approved the reappointment of the RBI Deputy Governor MD Patra for 1 year. The reappointment will be effective from January 15, 2024. The term was Patra was scheduled the end of 14th of Jan 2023 as per the RBI website. Patra was appointed as RBI Deputy Governor in January 2020 and last year he got an extension of 1 year. Patra joined RBI in 1985 and he was worked in various positions at the central bank. Next question. RBI establishes tighter guidelines for non-convertible debentures and short-term commercial papers. How many significant modifications are included in the new rules which take effect on 1st of April 2024? Option C, 6 is the right answer. RBI has tightened rules for the issuance of short-term commercial papers and non-convertible debentures with an initial maturity of up to 1 year. The new norms are effective from 1st of April 2024 and include 6 key changes: commercial paper and unsecured money market instruments issued in the form of promissory notes. Okay? Non-convertible debentures are secured money market instruments with an original or initial maturity up to 1 year. Eligibility for investment: all residents are eligible to invest in commercial paper and non-convertible debentures. Non-residents are eligible to invest in CPs and NCDs in extent permitted under FEMA on the rules framed under. Same content here: tenure, restrictions, minimum denomination and settlement, form of issuance and holding, individual subscription limit. Next question. The digital payment app for the Tata Group, the Tata Payments, has received a payment aggregator license from the RBI. Which of the following payment gateway is not integrated with Tata Pay? Paytm is the right answer. Tata Pay held through Tata Digital aims to facilitate e-commerce transactions through its platform. Tata Payment operates under Tata Digital, the subsidiary entity of Tata Group dedicated to its digital businesses. First industry players transaction management DGO license. Next question. RBI clarifies the word politically exposed person to comply with FATF guidelines. How many countries are member of the FATF? Right answer 39. Option D is the right answer. The Reserve Bank of India updated KYC norms for politically exposed person who transact with regulated entities seeking to comply with the recommendation of the FATF Financial Action Task Force. In the amendment KYC Master Directions, the central bank defines PEPs as individuals who have held or are currently entrusted with prominent public function by a foreign country. This includes heads of state government, senior politicians, senior government or judiciary or military officers, senior executive of state-owned corporation and important political party officials. Important information regarding the FATF you can check there. Next question. The RBI managed DEA funds will require banks to publish information about unclaimed deposit on a regular basis on their website and in branch location. What does the E stand for in DEA? Education is the right answer. Option B. Penalty waiver for inoperative accounts. comprehensive framework guidelines, applicability and effective date. Public disclosures and unclaimed deposit, long-term unclaimed balance transfer, regulatory authority. Next question. RBI gave ICICI AMC permission to purchase a 9.95% interest in Equitas Small Finance Bank, and which bank? RBL Bank is the right answer. Federal Bank stated that the RBI has accorded approval to ICICI Prudential Asset Management Company Limited for acquiring up to 9.95% stake in the bank. The approval granted by RBI is subject to the compliance with the relevant provision of the Banking Regulation Act 1949, RBI Master Directions and Guidelines and acquisitions and holding of shares or voting rights in banking companies dated on 16th of January 2023. Meanwhile, RBI also accorded approval to ICICI AMC to acquire 9.95% stake in RBL Bank and Equitas Small Finance Bank. Next question. Which bank is designated as a domestic systematically important bank (DSIB) by the RBI along with SBI and HDFC Bank? Right answer, ICICI Bank is the right answer of this question. The central bank has prescribed higher additional common equity tier first requirement for SBI and HDFC Bank and 0.40% respectively as a percentage of their risk-weighted asset. For ICICI Bank, an additional CET1 requirement continue at 0.20. SBI, HDFC Bank and ICICI Bank continue to be identified as DSIBs, while ICICI Bank continue to be in the same bucketing structure as last year. SBI, HDFC Bank moved to higher buckets. RBI latest DSIBs update is based on the data collected from banks as on 31st of March 2023 and factoring in the increased systematic importance of HDFC Bank post the merger of erstwhile HDFC Limited into HDFC Bank on 1st of July 2023. Next question. What are the partners in the Build for Billion Startup Accelerator program? Right answer, DLabs at the Indian School of Business, Reserve Bank of Innovation Hub and Union Bank of India. Option A is the right answer of this question. On 13th of January 2024, DLabs at the ISB, Indian School of Business, in partnership with the Reserve Bank Innovation Hub and Union Bank of India, launched a startup accelerator program called Build for Billions. So it's the last question of our last 8 months RBI circular, January to August 2024. Information regarding the PDF, if you want to purchase the PDF, you can purchase here. Instagram, Telegram, WhatsApp, and you can join Facebook page. If you like the video, please subscribe the channel and share the video and like the video. So thank you. Thanks for watching.